Hi there, Casey Healey, Century 21, Newcastle in Newcastle, back with our monthly finance video with Nick from Inovayt Finance. Thanks for coming in, Nick.
Thanks for having me, Casey.
Thanks for being back together.
It's good, it's good.
I'm so excited. I've had a great week being back in the office this week.
It's nice to see people again, isn't it?
It is, like back to, I don't know, rhythm and yeah. Anyways, what's happening? What's the current state of play in that finance market? How's it going?
There's a lot happening out there, that's for sure.
Lots happening and being said in the media.
Yeah, it's been a pretty common headline in the last 2 or 3 weeks, so obviously a lot happening. Interest rates still low.
Yep.
Obviously there is some movement there and we'll discuss that in a minute. Regulation, that's a hot topic and we love regulation in Australia, so it's always about. But yeah, there's still a lot of finance happening, a lot of approvals, a lot of settlements. You know, that property market is still moving more so than we've seen in the past. So even with the prices, it's amazing what's happening.
Yes, definitely. APRA. What is APRA first? What is APRA? Who are APRA?
APRA are essentially the regulator that sits between the Australian government and the banks.
Yep.
So that's their role, is to regulate the banks for the government. So yeah, that's who they are in general terms.
Okay. And the big news that come out just recently about tightening and trying to also minimise risk on debt levels.
Yeah.
What's that about and how's that affecting?
Yeah, I think, look, and that's an important point to raise, is that their role is not to manage house prices. That's probably what
That's what's really been pushed out in the media, is that they're trying to bring back the house prices.
Which I guess their role is to manage household debt levels, exposure, all that, the risk in the general population, which therefore does control house prices. You'd think, and that's, I guess, what the overarching media is saying. But yeah, what they've obviously got to step in at this point. They're copying a bit of pressure from the government. Everyone's talking about what's happened in the house market. So they've stepped in first off and increased the assessment rate. So for anyone who doesn't really understand that, basically, even though you might get 2.5% on your loan with the bank still has to assess you at a higher rate to make sure that you can afford the loan if rates do change in the near future. Previously it was at 2.5% minimum on top of whatever rate you're going to get.
Yep. Now
it's been lifted to 3%. So that really depends on the bank and how their internal metrics work, because some banks already had a 6.1% assessment rate, others were at 4.95. So there's a lot of variance in the market. So it's not going to impact everyone at every bank, but the average we're sort of thinking is 5%.
5% of your borrowing ability.
Yeah. That's, but again, everyone's so individual, it's hard to say, this is your impact, this is your impact. It's case by case.
Definitely. So just as a broad, it's about 5%. Affordability has dropped. Pre-approvals. If you've got pre-approval, pre-APRA change, how's that being affected? Does that have to be reassessed, or banks still holding with those pre-approvals?
It's a very interesting topic, and it differs based on bank. I would say the majority are going to reassess, because it's a formal requirement from APRA as of the 1st of November. So if your approval hasn't formalised, I would think the majority, I've seen a couple that are saying they're not going to, but whether they do or they don't, we don't really know yet. But I would say most will be reassessed at that new buffered rate.
Numbers for landlords. What's your number one tip for landlords? Because there's some talk in the market that things are tightening up, that lending is going to become a bit harder. If you're a landlord, you had one property, because we know most landlords, 80% of landlords own one investment property, not numerous properties. No. What's your biggest tip for those landlords today, moving forward, to ensure they're kind of really maximising their return?
Number one tip, and it's probably been the same for 3 to 6 months, is just to...
We seem to harp on about this a little, but that's what it is.
And I think a lot of people have been tarred from 2017, 2018, where the regulator and in turn banks really target investors and made it really hard to renegotiate interest-only periods, get a decent rate, access finance, be able to refinance in general. That's not the case. Like, these are broad brush regulations, and if everything stacks up, there's no magic wand trying to find the investor and not refinance them or give them a good deal. So I think that's a bit of a stigma thing, but absolutely, if the future does look like there's probably going to be more regulation come in if the market continues to go the way. That's just, we can all probably see that. So why not, look at what you can do now, tidy things up, get a low rate, re-extend your interest only period if you need to for 5 years to make sure You know that's there, so you know what your income's going to be. If that's your strategy, I think you're mad if you don't at least look at that.
That's right. And the best way for someone to do that is to
get in touch. Yeah, absolutely. Reach out.
Make the call. Reach out. I will put Nick's link in to book a chat with him. He's happy to talk to any of our current landlords or just investors watching this video. But you really need to, you've never had a better val. You're never going to get a better val on your property. So why not look at fixing or look at refinancing now? Interest is always your biggest expense of an investment property.
I think, yeah, absolutely. Like you've got to draw that line in the sand now, because we don't know what the future holds. If regulations do get tougher, maybe valuers will be tougher, regardless of what the market's doing.
Yeah.
At the moment, we're having great success with valuations on investment properties purchased as little as 12 months ago. So it's an awesome time. Like some people might have bought at a high LVR 12 months ago.
Well, that's us. If you want to reach out, as I said, Nick's details will be in the back of this video. I'm Casey Healey, Director here at Century 21. This is Nick from Inovayt Finance. Please don't hesitate to reach out. We want to be able to help you secure your financial freedom through property. Thanks.
Thanks, guys.